What I want to talk about is how I turned $4,000 into $80,000 trading penny stocks. Being a consistent day trader, it takes a lot of work. You have to stick with a certain strategy. You have to know where to play. You have to know what is going to be hot, but trading penny stocks, it is predictable. It's predictable if you are willing to work hard. It is predictable if you are willing to study. But when you just open up an account right away and you don't know where to go, you can't just randomly gamble. You can't just randomly pick stocks. You have to have a trading strategy. You have to say to yourself, hey, these are the stocks I want to look at for these reasonings, and you have to be able to stick to that strategy to be able to make money in this market. So the main goal I wanted to do here was open a $4,000 cash account and turn it into an $80,000 trading account. We're going to be talking about why I used a cash account instead of a margin account, but I wanted to show traders, especially new traders to more even experienced traders, that you can grow a small account trading penny stocks, be a full-time day trader, and on top of that, make a very good income trading penny stocks. So how was I able to do this, guys? I want to break down my strategy. I want to talk about what I was looking for in these plays, the strategy that I've been using the last 4 years that's able to make me upwards of 6 figures every single year trading penny stocks. What I also wanted to do was be able to live stream this every single day in chat. Over 1,000 different traders. As you guys know, DekmarTrades.com has over 1,300 traders in it every single day. So I wanted to live stream every single trade, talk about every single trade, show you guys what I was in, when I'm in, why I'm in it, when I'm getting out, so you guys can see firsthand that I am making this money through the stock market, trading stocks. On top of that, I want to be credible. Every trade I get into, guys, I want to have a credible reasoning behind it. If that is a chart pattern, if that is a press release, if that is because I see some sort of breakout 80-20 setup that we always like to go out after, everything I go after, guys, I want to have a reasoning behind it. Reasonings behind it is not only going to show that I have credibility behind my trades, but I want to show you guys can get a learning experience from it. So when I'm trading and I say, hey, this stock is breaking out because it has a great press release behind it, or this stock is breaking out because it has some sort of great news behind it, or this stock is breaking out because it's a low float and stock has volume coming in towards it. That is not only giving credibility towards, of course, myself, Dekmar Trades is a mentor, but I want you guys to get education from it, and I want you guys to get confidence from it. The more you know, the more confident you are going to be as a trader. So I constantly want you guys gaining an education, and me trading and me live streaming my trades and me showing you guys, hey, you know what? If you follow this strategy and you follow these chart patterns and you follow this certain setup, you could be very profitable. Because when you aren't scared in the market, when you don't have any fear in the market, when you are confident in yourself, you are going to be able to make a lot more money. What else do I want to talk about? I want to talk about being 100% transparent. When I'm looking at this and I'm doing my main goal, I want to show 100% transparency on all my trades. I want to show you guys everything, my real statements. And as I was showing before, this is from my E-Trade account. And I want you guys to see this. I want you guys to see from eTrade.com right now, my individual broker, total gains realized, $80,000, $80,076.84. From the time I started this, August 31st, to the time I hit $80,000, which is on March 14th. This is what every successful trader should show you. If you are going on some website, or you are trying to learn from some mentor, or you are saying, hey, do you know any profitable strategies? And someone says, yes, I've been a very successful trader. Every successful trader should be able to show their P&Ls. That's so important to me, guys, because most of the time, penny stock traders, day traders, they get a bad rap. Why? Because they are known for what? Basically faking trades, or basically just giving advice without actual ever trading. Learn from someone who actually has made this money before. And I have no problem, again, showing you guys all my P&Ls throughout the whole entire trade process. So the 6.5 months from eTrade.com. It doesn't matter, again, if it's from the first day I started, August 31st, and I click to what? And I click at, November 1st. Here, this is how much money I made from here. And I just have all my P&Ls that you guys, of course, can go ahead and check out. Or it doesn't matter, again, if I go all the way to, near the end of it, where we go from February 1st all the way to, March 14th, where we basically ended. March 14th right here. And then here are my P&Ls on this. But I want you guys to see You know, we have credible transparency right here. This is from eTrade.com showing you guys my credible gains. Because last time I did a video like this, there were a couple people that are saying, oh, you know, you could just always, you know, make those type of P&Ls. You know, this is from eTrade.com. This is right here on top of my screen. I don't mind, again, dragging this over. Why? Because, again, on top of that, I'm closing this account soon. As you guys know, right now, I took all the money I just made out of my eTrade account. That's why there's only $2,000 left in here, because I'm switching over to a TD Ameritrade account. But I have no problem, again, showing you guys my transparency on how much money I've made over throughout the time, the 6.5 months right here, starting on August 31st when I funded my $4,000 account, all the way to the time I hit my 80 grand, which is all the way at March 14th. It took me about 6.5 months to do. But I have all my profits right here. I'm showing you guys straight up. I want to be transparent. And every single day in chat, again, every single day in chat, I was showing you guys my transparency and always showing you guys my P&L. But for the purposes of this video, of course, I want to show you guys right here as well. So every single time, if you learn from me, if you learn from someone else, if you guys see, you know, maybe another mentor that you enjoy listening to as well, that's absolutely awesome. I 100% support learning from as many different people as you can that are successful traders. But please, again, make sure that you guys always do your research and make sure someone is always showing their transparency, their credibility. A little bit of random, a little random just screenshot on Twitter, that's not credible. That could just be fake money, paper trading. If you just see some little, P&L, $10,000, again, ask for eTrade.com statements, ask for TDAmeritrade.com statements. Everything should be credible. And that's why I want to make sure you guys see this, because I'm out here trading my real money, making real money, trading real stocks in the market. And this is just, again, by following my strategy. This is just following what I know, what has been working for me for the past few years. And it's so important that you guys understand that, this works. And I want to show you it. And that's why I did the small account, and I want to prove it to you. So my main goals of this was what? Open a $4,000 cash account, turn it into $80,000 trading account. I want to live stream every single trade in front of over 1,000 traders every single day. I want to have credible reasonings behind every single trade I do. And I want to be 100% transparent and show real statements from eTrade.com. So why a cash account and why not a margin account? Why did I use a cash account and why didn't I use a margin account on this? Now the pros and cons about this, the pros that why I use a cash account and why not a margin account. Well, the reason that most people use a margin account is why? Because you can trade a lot. And on top of that, you get buying power. You get as much buying power as your broker allows you. Sometimes, 3 to 1, 4 to 1, 6 to 1. So that means if I put in $2,000, I could possibly be trading, let's say, upwards of $6,000, $8,000, $10,000 because you have buying power behind this. Now, this sounds like a pro because I could be able to buy more shares. I can get into more plays. I can go after and attack more stocks. But to me, this is a little bit more of a con. To me, this isn't really anything I really want to get too involved with. Why is that, guys? Why don't I want to get involved with, let's say, some sort of account where I can have $10,000? And that's simply enough because I know if I invest that much into a play and I end up taking a loss, I could lose my whole entire account. I could lose my whole entire account if I'm on a margin account and not a cash account. Why I like to use a cash account is because it keeps me disciplined as a trader. I like to know, hey, I have $4,000 in my account right now. If I trade $4,000 on a cash account, that's it. I only have $4,000. Now, what's the pro about this? The pro about this is it keeps me very disciplined as a trader. As a trader, I stay extremely disciplined because I am not constantly just getting in and out of plays. I'm not buying with money I don't have. I'm not getting carried away. I'm not revenge trading. I'm not over trading. I get 1 to 2 trades max, maybe on a day. And you know what? That's it. Because if I have $4,000, I can only trade with $4,000. And if I have $4,000 and I trade $4,000, you know what? Win or lose, now I'm done. If I win, I can't get super emotional and I can't say, okay, let's go after something else and let's go make some more money. Nope. My funds have to settle. Nothing I can do right now. Funds have to settle. I'm all set. Let me enjoy my money. And what do I do now? Now I study. Now I do research. Now I'm looking for chart pattern setups. Now I'm looking for upcoming news, 80-20 chart setups. If I'm on a margin account, I could be possibly buying, a couple times. I could buy once. And you know what? I lose. And then I try to buy again. And then I lose again. And then I try to buy again to make it back. When I'm on a cash account, it's one time, maybe two times if you don't use all your account, and then you're done. But what I usually do, again, because we're going to talk about how many shares we need to buy coming up in our strategy, is usually comes down to one trade. One trade, I make a little money. One trade, I lose a little money. But I get one trade. And that basically eliminates me going from over trading, eliminates me from revenge trading. It eliminates me from getting super emotional behind my trades, especially when I'm on a small account. When you are on a small account, it is so crucial that you guys are constantly locking in profit and not digging yourself in a hole. A big mistake you're going to make as a new trader is hopping in on plays that you really shouldn't be getting into. You're going to get very emotional as a trader. As I say, guys, when you're first starting off at something, when you're doing something that you're completely new at, you're not going to be very good at it at first. Right? It doesn't matter if it's basketball. It doesn't matter if you're football. If you do something and you've never done it before, you're probably not going to be that amazing at it. You're probably not going to be that good at it. And that's not saying that you're never going to be good at it. It's just saying right here at this moment, you're not that good at it. And so if you're starting off on a small account and you have a margin account and you're just buying away, you could lose your account so quickly. So why do I use a cash account? Why do I use this, guys? Because yes, my gains are smaller on a cash account when starting off. My gains are going to be smaller, but my losses are smaller. And as long as I have more wins than losses, let's say I win $100. Cool. I win $100. Cool. I win $100. Cool. I take one loss. Okay, but then I win $100. Then I win $100. Then I win $100. Then I lose $100. Then I win. My account is still growing. And my ratio is about 70%. I win 7 out of 10 trades. So that means win, 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 loss, win, 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 loss, win, 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 loss, win, 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 win. So that means my account is constantly growing. So I don't want to get involved. I don't want to get emotional. I don't want to have all that extra buying freedom, because in the long run, that freedom is actually hurting me more than it's helping me. So that's why I like to use a cash account. That's why I don't like to use a margin account. My trading strategy when I was growing my account from $4,000 to $80,000, what was my strategy behind this? I wanted to trade stocks I can buy at least 1,000 shares per trade, but no more than 10,000 shares per trade. Why? When I have at least 1,000 shares per trade, guys, this equals out to $10 per penny. So every time that stock moves $10 per penny, what does that mean? That means I'm going to be able to make some good money if the stock goes on a nice spike. But if I don't have at least 1,000 shares, that's going to be a dramatic problem. If I don't have at least 1,000 shares, guys, and I'm only buying 200 shares or 300 shares, I'm not able to make enough profit to be able to grow my account. Most of the time, if you buy 100 to 200 shares, you need a whole dollar rip to, be able to see some sort of profit. You need like a $1.50 rip to be able to see some profit. That's not how you're going to be profitable in this market. What you guys have to do is have the necessary amount of shares to actually see that profit. To be able to say to yourself, okay, if I buy into this trade and I hold for 25 to 50 cents, I'm going to be able to make a few hundred to maybe a few $1,000s. If I buy 1,000 shares and I get a 25-cent rip, I can make $250. If I get a 50-cent rip and I'm in on 1,000 shares, I can make $500. But if I buy 100 shares and the stock goes on a 20-cent rip, I'm barely making anything. And on top of that, what's going to happen? I'm going to be getting money taken away by commissions and by my broker. So basically, buying 100 shares, buying 200 shares, it's pointless. You know why? Because you are going to have to play a monster play, or you're just going to put yourself in a position where either A, you're going to lose, or B, at the end of it, you're going to make either a couple bucks or you're not even going to make money at all because you're going to lose all in commissions. So buying anything under, 1,000 shares the majority of the time is more just raising up your stress levels, hopping into a play with very limited upside, just because either A, the stock's going to fall and you're going to lose, or B, what's going to happen, the stock is going to run 25, 50 cents. It might go on a little bit of a pop. You're going to make a little money. You're going to lose a lot of it from commission, and then you'll have a little bit of profit. Was that worth it? No. But some people always say, Dek, well, I have a $2,000 account. What does that mean? Again, that means you can really only play stocks maybe between the ranges of like 250 and below. Maybe if you get at least, 800 shares, sometimes that would be acceptable. But that's the problem with growing a small account. And if you're saying, hey, you've been alerting stocks that are $5, $6, I can't play these stocks. Well, again, those are the stocks that are hot today. That's the problem with a small account. That's the struggle with a small account. That's why I did a small account challenge. because I want to show you that, you know what, it is tough. But if you stay disciplined and you wait for your play and you wait for that hot activity and you wait for that perfect setup and you wait for that hot press release, you'll be able to bank and you'll be able to profit and you'll be able to make a lot of money. And those gains are going to add up. One of the biggest things is locking in those profits when you have it. Understanding that these gains are going to add, understand that these are going to climb, but I have to have the necessary shares. I have to have at least 1,000 shares. And that's what I did on my plays. I had at least 1,000 shares. So that means every time it moved a penny, I was able to make, $10. So if I went on a 25-cent rip, 50-cent rip, which happens all the time. KONE went on a $4 rip yesterday. It went on another $3 rip today. LEDS went on a $4 rip today. A $4 rip, if I can just find a little chunk of that, 25 cents out of that rip, I can make upwards of a couple $100 just in that very quick play. And if I can do that, that's awesome. Boom, 25 cents, 1,000 shares, $250, $4,000 account. Okay, now my account's all the way up at 4,250. Let's stay consistent with that. Let's make our money. Now, why do I say no more than 10,000 shares? Once you start growing your account, and you get it up to 12,000, 15,000, 20,000, and you have, a $2 stock, that you are interested in, you can buy a lot of shares. You can load up on shares. And sometimes there's going to be a temptation for you to buy a lot of shares. There's going to be a temptation for you to say, hey, you know what? I could buy maybe like 20,000 shares on this play. And if this stock ever went on a big time run, I could bank even more than what I want, or what I'm even used to. But where does that get you? That sometimes get you in trouble. Because buying 20,000 shares is a lot different than buying 1,000 shares. First off, to buy 20,000 shares, you usually have to scale your way in. There's no way you can just market order 20,000 shares without affecting some sort of crazy manipulation in the stock price, especially on a low volume stock, especially on a low float stock, especially on a stock with a large spread. It's not what you want to do. So if anything, you're going to have to scale your way in and scale your way out, which is a completely different way of trading. And again, we have many scaling techniques and scaling lessons over in the video library at Dekmar Trades, as you guys know. So scaling is something you would really have to get used to. And that's, progressively buying your way in or progressively or selling your way out, you could say, which is, I want to get on 10,000 shares. Okay. You know what? We're breaking resistance. Let me buy 3,000. Okay. Let me buy another 3,000. Okay. Let me get my last 4,000 here. Because if I just, let's say, excuse me, let's just say market order in 10,000 shares at once, what's going to happen? The whole stock's going to shoot up. Whole stock's going to shoot up because I'm going to fill up, 10,000 shares on the ask. Then what happens? Everyone's like, wow, that thing just shot up all of a sudden. And then people on top are going to start selling. And now you're just going to be caught up at the very top, stuck with, 10,000 shares as everyone else is going to start dumping this play on down. So it's not a good idea. It's not a good plan to just buy 10,000 shares, especially on a market order. Now, 10,000 shares, every time a stock moves a penny, you make $100. So if you can get in at the right areas and you can get in the smart way, the disciplined way, the way that you're supposed to, scaling your way in, knowing where the breaks of resistance is going to be, knowing where volume is going to come in, that's when you guys can see a lot of hype. And that's when you guys can see a lot of profit. And that's when you guys can be like, hey, I like buying larger shares because I make more money. Obviously, I would rather play with 10,000 shares than 1,000 share because on 1,000 shares, I make $10 per penny. On 10,000 shares, I make $100 per penny. We get a 10-cent rip, I'm already up $1,000. We get a $4 rip, I'm killing it, 40 grand in a matter of one day. And that's how I was able to make $15,000. I made $15,000 in the matter of 30 minutes. And that was back in January. And that was just because I was in on a play. The momentum pushed on in. The stock went on a $1.50 rip. I had about 10,000 shares. Actually went more than $1.50. It was about a $3 rip. But I sold when I was up $1.50, $15,000, just like that. And that's the beautiful thing, guys. I'm 24 years old. I work from my home, work from my apartment. It's the beauty of penny stocks that you're able to make such incredible amount of money, such an amazing amount of money in such a short amount of time just by recognizing patterns, just by understanding other traders, where the majority of hype's going to look at, what people are going to look to play. Because people are the majority. They are what moves stocks. If you see a stock moving up, that is because people are buying it. If you see a stock going down, that is because people are selling it. If you understand the majority of people, if they are going to be buying or selling, you can understand the market. You can understand what the next move is going to be. Next up, the next bulletin point, trade setups with 80% reward and 20% risk, or low float stocks with news. First thing we know, Trade stocks with 80% reward, 20% risk. You guys already know this over at Dekmar Trades, if you guys are a member, which is 80%, 20. So we have our 80% reward, 20% risk. We call these 80-20 setups. And this is what we look for every time we're looking for our chart setups. We're looking for chart patterns. This obviously means, you do the math, 8 out of 10 trades we win at. That's 80% reward. Basically what I'm looking for is a pattern that if I hop in on, I am going to have so much more reward than I have risk. So much more reward than I have risk. I want to have the odds always in my favor. I want to have the 80% odds, 20% odds of losing. Now, if I can find something even better than that, 90-10, 95-5, obviously there's always going to be a risk when trading stocks. That's how it is. There's always a risk in trading stocks of, you're going to lose money. There's never going to be a 100%, play. There's always going to be some sort of odds. But you can always put those amazing odds in your favor. And that's where, again, some people come in and that's when they start bashing penny stocks. Oh, yes, penny stocks are just, gambling. That's all it is. It's just gambling. It's like I have right now, currently a 75% win rate on the small account challenge. I have a 70% win rate. So basically, if you want to call this gambling, call me the house. The odds are in my favor then. And you can make the odds in your favor. You can make this a gamble if you want to, if you just randomly buy and sell. But good luck, making money consistently. I've been trading for the last 4.5 years. I already showed you guys, I proved to you guys off eTrade.com on transparent, credible statements that you can able to grow your account from 4,000 to 80,000. This isn't out of luck. This is from following a strict strategy. This is from practice. This is from work ethic. So this is something that you guys can do as well. Now, an 80 reward, 20% risk pattern, what does that look like? Obviously, you guys, obviously, if you guys have already watched that lesson, but at the same time, an 80% reward, 20% risk pattern is basically we're looking for a lot of support underneath us. This support could be natural support lines. This support could be indicator lines, 50-day moving average, 200-day moving average, 13 EMA, our go-to indicator lines. This could just be a lot of consolidation where it's currently at, which will hold the stock up as support. And this means we have a lot of room to run. That means we don't have a lot of room to fall because we have all this support, and we don't have resistance till $1, $2, $3 away. There's no sort of past chart history pattern that's really blocking the stock if it spikes. There's nothing that's really going to make it dramatically fall. It's low on the RSI, which means it's already on the oversold side. So we're oversold. We have support underneath us. We're building higher lows, and we have nothing above us in the sky that's going to be able to hold the stock down. It's a play that we could basically hop in, and it's a freebie. It's saying, hey, you know what? This stock could definitely spike. If news comes out, if volume comes out, if we see any sort of hype come into this play, it's going to be a play that's absolutely going to rip. If it doesn't move at all, it's not going down. It might move sideways, but it's if it does spike, it's going up 100%. It's not going to be falling at all. So sometimes we look for these 80-20 plays, and 80-20 plays are awesome because it's either A, they're just not going to do anything at all, or B, they're going to spike. What are better odds than that of saying, hey, you know what? It's either A, not going to do anything at all. You may have to pay $5 to $10 on a trade commission. But other than that, it's just going to go on up, especially if news comes out or especially if we break some sort of resistance line. So constantly, when I'm looking around for charts, I'm looking for 80-20 setups. I'm looking for 80-20s where we could see a giant rip, a giant pop, a giant spike. As you guys know, get into our video library. We have a video lesson on teaching you how to find these, teaching you guys how to play them. That's called the 80-20. Also, we have high reward, low risk pattern video lesson as well. That'll teach you how to find 80-20 chart setups. What's the second part of this in my trading strategy? Low float stocks with news. Why do we play low float stocks with news, guys? Why do we look for low float stocks with news? As you know, low floats, one of the best things to look for in penny stocks. Low float, when we look at the float, guys, the float is the shares offered to the public. Now, when we have a low float, so we have a low supply of shares offered to the public, and we have a high demand, that is going to increase the price. That's simple economics, as you guys know. So what we're looking for is a low float stock with news, some sort of positive news. Low float stock, limited shares to the public on this certain stock, and now we have positive news, which is making everyone want to buy this one stock. But now everyone wanting to buy this one stock, there's only a limited supply of shares. So those shares become more valuable, and that makes the stock spike, and that makes the stock go on a very nice rip. So what I'm constantly looking for is news using my news scanner, and I'm filtering out all the low float plays. So I see on a low float play, we have positive phase 2 trials. We have cancer improvement treatments on, our patients right now. We have an agreement. We have a deal. We have a $3 million contract. We have some sort of partnership with Apple. What happens on these low float plays? They immediately spike. They immediately rip. They immediately get these nice pops. Under 1 million in float, 1 million in float, 2 million in float, 3 million in float. These are the big boys. These are the ones that are going to go on massive rips in the penny stock world. So I'm looking for at least 1,000 shares, up towards 10,000 shares. I'm looking for 80-20 chart setups if there's no news. If there is news, I'm looking for news to be on low floats. And on top of that, guys, I'm only trading one time a day. Do not overtrade. I'm not here to overtrade. And that goes back to me using a cash account. I use a cash account. Why? Because I do not want to overtrade. I use a cash account instead of a margin account because I don't want to have emotions get involved. I don't care if I win $5,000 on a one trade. That doesn't say, oh, okay, now I'm the best and now I get to trade more. No, lock in that $5,000. Lock in that trade. It's only good of saying, hey, I have $5,000 if you lock it in and you leave that day with that money. The last thing you want to do is hop back in, and what happens? Then you end up losing it, and then you're just like, oh, I should have never traded it. That's why I love a cash account. I lock in my money. It makes me keep it. I don't care what my emotions are that day, if I'm happy, super excited, or super angry and want to make it back. Having a cash account doesn't let me trade. It keeps me disciplined as a trader, which is so important and something that every single trader, I believe, should use. If I ever do a small account again, I will be using a cash account again. It's one of the biggest secrets. I think one of the best points to use, use the cash account. Key points. When I was starting off this challenge, and I was saying to myself, okay, how am I going to do this? I have my strategy set, but what are some key points I want to remember while I'm becoming this trader? Number one, stick to my trading plan. Sticking to my trading plan eliminates fear. Fear is something that all traders face, and it's something that people come to me every single day and they say, hey, Dek, I'm scared when I trade. I don't know what to do. I forget everything that you've taught me. Because the moment I hit that trigger, what happens? I get fearful. I get doubtful. I don't know what's going on anymore. How do you eliminate fear? Eliminate fear in two different ways. You can eliminate fear through experience. The more you do something, the less scary it comes. Best way to put this would be driving a car. You don't hop in your car right now and you're scared to go somewhere. But when you first got your permit, you were probably a little nervous to, maybe drive around. You were probably a little nervous to hop in the highway. But now, again, you sprint to your car, you throw on your seatbelt, you get the gas, and you're out of there. You don't sit there and say, whew, I can do this. I can do it. I can make it to the mall. I can do it. I can do it. Okay, let's go. Okay, well, hold on. You don't do that. You just hop in your car and you go. Because you know what? You've been doing it for so long. And it's the same exact thing when it comes to stock trading. The more you do it, the more experience you get. It's just another day about making money. That's all it is. It's another day of trading. It's another day of profits. It's another day of green ahead. That's all it is. That's all it comes down to. So the more you do it, the more you practice. That's going to eliminate fear. How else do you eliminate fear? By having a trading plan. By having a plan. Going into a stock knowing that you guys are going to be profitable. And on top of that, if you're not going to be profitable, if things don't work out your way, which does always happen sometimes, obviously, things are not going to work out your way 100% of the time. If something does not work out your way, you're going to have a trading plan to stop that, to cut your losses. So a trading plan is going to eliminate your fear. Why? Okay, let's say the stock is at $2. And I say I want to buy the stock at $2. And it goes up to $2.25. And I have a stop loss at $1.95. So I buy at $2. I say to myself, my sell target's at $2.25. My stop loss is at $1.90. Okay? So I want it to shoot up 25 cents. But my stop loss is 10 cents down below. And let's say it starts moving on up, moving on up, moving on up. Stick to my trading plan. That means at $2.25, I'm locking out. That's not me saying, maybe it'll keep on going. Maybe I'll let it go a little bit longer. And then, it ended up coming on down and I don't make as much money as I should. Or or I buy in at $2 and it starts coming down to $1.80. Or let's say it comes down to $1.94 and starts coming down to $1.93. And now it's at $1.90. And now what's the toughest thing to do? Is to accept that you took a loss. Accept that you said to yourself, hey, you know what? This is where my stop loss is. This is where I want to get out. Because the problem is going to be when you say, maybe I'll let it go a little more. I'll give it to 187. Okay, I'll give it to 183. Okay, 150. Okay, well, now half my account's gone. Now maybe I can just, make something. Come on, please come up sometime. This could have all just been avoided if you just stuck to your trading plan. If you just said to yourself, hey, you know what? I want to lock in my profit when I have it, and I want to get out on a very quick area. Cut those losses quickly. Stick to your trading plan, guys. We're all going to have losses at moments. And as I say, your best lessons are going to come from your losses. Every trader wants to celebrate a win. So do I. You get a big time win, you deserve it. Pat yourself on the back. But that shows that, you mastered that certain strategy, that certain setup, that certain play. You're doing great at it. That's awesome. But there's always room for improvement. And you know what? Improvement is going to come from your losses. The biggest, probably the biggest wrong thing that traders do, especially when they're new at trading, is what? They take a loss and what do? They get upset. They shut their computer. They're like, all right, forget that. I'm buying this stock now. They start revenge trading on other trades. They completely skip the fact that they just lost that trade because they don't want to think about it. But as a successful trader, you have to look at that trade, stare that trade right in the face and say, okay, why did you beat me this time, Wall Street? How did you take my money here? Okay, did I buy too late? Did I buy at the top? Was I chasing here? Was this just a bad play or market conditions slow? There's a reason. There's a reason on every trade on why you win and why you lose. It's the same exact thing on why basketball players or football players, they watch film. Sunday a football player plays. Next day at practice, what do? They watch film. They go over their game. They say to themselves, hey, Johnson, awesome job coming off the tackle right there. Great hit right here. Awesome job. Or you're going to say, Smitty, what in the world are you doing? This was a horrible job by you. You have to pick up that man. And you know what you say? You know what Smitty's saying to yourself? Okay, that's a little embarrassing. I completely missed that play. I completely missed that man. I'm going to nail him next time. What's going on right here? As a stock trader, you say, hey, I completely overtraded here. I stared this in the face. No one wants to look at a loser. No one wants to dive into a loser and kind of sit in that pain. No one wants that. But that's the best thing to do. And say to yourself, hey, I don't want to feel like this. Hey, I don't want to lose this money. This isn't a good feeling. So let's make sure this doesn't happen again. But if I just ignore it and ignore it, I'm going to be making the same mistakes over and over and over again. So that's the worst thing to do if you just completely ignore it. You take a loss, look at it, say to yourself, you know what? I'm not going to make this mistake again. I figured out what I did wrong. Now let's improve as a trader. That's how you guys do it. And this all comes from sticking to your trading plan. Sticking to your trading plan avoids fear. Sticking to your trading plan is going to constantly grow your account. Sticking to your trading plan, let's say I have a 10-cent loss. Let's say I lose, 10-cent loss. Let's say I have another 10-cent loss and I lose again. And let's say I get one win. That's a 20-cent win. Boom, now I'm back to even. Now I get another win. 20-cent win. Boom, back, now I'm up. Now I get another 20-cent win. Boom, now I'm up. Now I get one 10-cent loss. Okay, I'm still very up. And that's how, again, you grow a small account. You keep your losses small and you keep your wins a little bit bigger. So number 2, do not hesitate. Hesitation, guys. It does not matter if it is in trading or, as I say a lot in life, hesitation is always going to hold you back. When you hesitate, you're second guessing yourself. When you hesitate, you lose, especially in stock trading, especially in day trading, especially with penny stocks. These stocks move so quickly. They are up and down 100% within the matter of minutes. The longer you wait, the longer you are missing out. And that's why we do these exercises, and that's why we study, and that's why we go over press release patterns, and that's why we go over chart setup patterns, and that's why we look at everything we have to look at to be prepared to know right away if that play is going to be good. If you hesitate, that you can miss out on 50 cents. Then you buy, and now you're at the top, and now it turns around. You have to be able to do this stuff when you sleep, to be able to say to yourself, hey, I know that pattern. I know volume's moving in. I know that's a good press release. I know that's good. Okay, Dek taught me this. Okay, we're all set. The last thing you want to do is hesitate. Say, I don't know if this is good. It's still moving up. Okay, little pullback. Oh my gosh, it's still moving up. Oh, now it's moving. Okay, I'm going to buy now. Boom, now it's at the top because you just wasted out in the last 30 seconds, which could have been your moneymaker if you just pulled the trigger. So I was saying to myself when I'm starting this up, don't hesitate. You've been doing this for a long time. If you see a play that you like, pull the trigger. Believe in yourself. Be confident. Next, as we already touched up on, cut losses quick. Huge problem with new traders. Huge problem with people with small accounts is they don't cut losses quick. They think the one trade is going to change their lives. One trade. It's not about one trade. It's about many small, consistent trades. If I have one trade and it's not going my way, okay, you know what? That trade doesn't go my way. Let's get out of it and let's find a trade that does go my way. But I'm not going to sit on one loser and lose my whole entire account. I didn't work so hard to put this account together for me to sit on one bad loser and lose 50% of my account. If a trade doesn't work your way, a trade doesn't work your way. That's absolutely fine. Is Steph Curry going to make every single shot he puts up? No. Is Tom Brady ever going to go a whole season without throwing an interception? No. But you know what? Steph Curry misses a shot, and he's next play down, he says, give me the ball. Okay, he shoots it, and he makes it. You know, Tom Brady may get picked off. Next time he drives down, probably he's going to throw a touchdown. Just because you have to cut your losses does not mean you're a bad trader. It just means, okay, you know what? That didn't work out in your favor. You should be proud you cut your losses quick. Sometimes, again, my biggest accomplishments to myself is when I say to myself, wow, I cut my losses great there. I cut my losses when I was down 15 cents and the stock absolutely dumped all the way down to $2. I didn't make any money, but you know what? The stock dumped huge after I got out. And if I held the bag, if I just kept sitting in that loser, I would have lost thousands upon thousands of dollars. But now I only lost about $200. So again, it's a great accomplishment when you can get out of a play in such a good manner, because a lot of people just keep holding the bag, holding the bag, holding the bag. And they say, oh, eventually it'll come back up. But that's not the case with penny stocks. In 2 years, most of the penny stocks you play now will not be companies anymore. These companies that we play, they're companies. They're businesses. They're new startups. And what do we know about businesses, guys? You know, within the first 2 years, 80% of businesses are going to fail. So with that being said, we're investing basically into companies. And if you're basically long-term investing now because you're just bag holding into a company, don't expect if that stock maybe went on a spike and maybe never gets back up to the price that it's currently at. You have to be able to say to yourself, hey, this is not working out the way I want right now. It's time for me to cut my losses. Next point is do not chase. When you chase, that is going to be one of the biggest downfalls of your trading. And I do want to bring up that chart, as I always like to bring up, of chasers. And this shows, again, a perfect example of traders chasing plays. And you guys know exactly what I'm about to bring up if you guys are in the chat room, is this textbook picture that I came up with, and I was telling you guys right here what. This is basically a diagram of traders and the typical spike. The typical spike on every play, I would say, which is what? We have our early swing traders, which is about 2%. So we have our early swing traders who get in, which is about 2% of people. Then we start switching over to our breakout traders. So if we're getting a nice breakout stock, early people who may recognize a pattern, people who may see a press release extremely early, people who may be saying to themselves, oh, wow, this looks like a good setup, may start getting in. Then it starts getting into more breakout traders, 15% of people that are going to play the stock. But where the majority of people are going to get into? The majority of people who are going to get into this play, who are going to lose, are the novice traders, the rookie traders, the traders that visually have to see a spike before they get into a play. And then what happens? Most of them get caught up in the short, it dumps on down, and then you got your dip buyers down here. You guys know the statistic. Within your first year of day trading, there's not going to be a lot of people who succeed. It's only about, 80% of people lose on your first year of day trading, 20% will be successful. It's like everything else. It's like that business statistic. If you want to think about like the NBA, only 1% of basketball players are going to make it to the NBA. Only 4% of football players are going to make it to the NFL. And why is that? Only the people who are willing to work hard are going to be able to make it. Only the people who are actually going to be able to give it everything and be passionate, actually put in the actual work to become successful. People always say they want to make $1 million. Okay, then you got to put in a millionaire work ethic. A millionaire work ethic is not sitting on your couch and playing Fortnite. A millionaire work ethic is not just laying out and saying, hey, Dek, tell me exactly what to trade. I'll just follow exactly what you do and you'll make all my money for me. That's not how it works, guys. I'm here to teach you how to trade, give you the fundamentals, teach you the techniques so you guys can go ahead, carry it out to your trading and absolutely destroy it. I don't want you guys to be sheep and just follow. I want you guys to be wolves. I want you guys to attack it. I want you guys to be able to be self-sufficient traders. So when you guys are looking at this and I say to myself, I cannot chase, do not be part of the 70% of novice traders, the 70% that are going to lose their first year because all they're doing is buying stocks at the top for these stocks to come back down and absolutely hurt them. You have to be in the 2%. You have to be in the 15%. If you can't be this, Be in here, the shorters, the 10% and make money, or the dip buyers. You could be here, you could be here, you could be here, you could be here. Just don't be part of this. Okay, Dek, well, how do I do that? That's by, again, studying your chart pattern, studying your press release, studying, floats, studying what to look for in a good chart, studying the level 2, studying volume. But if you wait for a spike to happen already, if you visually see the spike, most of the times it's too late. You have to be in where? Before the spike happens. You have to be able to visually see it here, that you know that this is going to come, or here, that this is visually going to come. But once you see it happen here, it's too late. And now short is going to take over, then it's going to dump on you. And then dip buyers, start pushing this back up a little bit. But this is like the standard spike, I would say, and the majority of people who win and lose at it. So the last thing you want to do is be buying on the top over and over and over again. So how do I keep myself from doing this, guys? What do I always say to myself? I always say to myself, hey, if I see the spike and the spike has already happened, if the stock is up more than like 30%, let it go. Now that stock could possibly run all the way to 200%. And there's times I see a stock go from $4 to $5. And I say to myself, all right, $4 to $5, awesome rip. You know what? I wish I could have got some of that profit. And then what happens? Then the stock goes from $5 to $10. And I miss out on a $5 rip. But the majority of the time, guess what's going to happen? It's going to go $4 to $5 and turn around. I refuse to chase. If I am late, I don't hop in. As I always say, guys, it's like Ricky Bobby, Talladega Nights. If you ain't first, you're last, okay? That's how I basically carry over my trading. If I'm not in that early breakout traders, if I'm not in that early 2%, it's not worth it to me to get in on something else. It's not worth it to me to hop in on that play right now. I can get in on something else. I know that there's going to be a million other spikes. There's going to be a million other rips because people get so disappointed on certain plays that they're just, not currently in. Like for example, right here, we could say, oh, wow. We could say RKDA. It's like RKDA goes on a massive spike, right? This stock goes from $6 all the way up to $66. Awesome rip, awesome spike. Now traders saying, I can't believe I missed out on that. Who cares? You know why? Because the next day, INT goes from $6 all the way up to $50. Okay, bada boom. There you have that. Or some people always say, oh, wow, CHFS, I can't believe I missed out on CHFS right here in November. And it's like, it's okay. You know why? Because the next day you have DCIX, right here. And DCIX, oh, I can't believe I missed out on DCIX. Okay, you have OPHC right here. It's, oh, I can't believe I missed out on OPHC. It's like you have CREG right here. And it's like, oh my gosh, I can't believe I missed out, let's say, on KONE, today or yesterday. I can't believe I missed out on KONE yesterday. It's okay because you had, LEDS go on, this massive run this morning, where LEDS had this giant gap up. You're going to see plays every single day. You're going to see plays every single day. So to me, it's never worth chasing a play. Never worth chasing a play. And there's no point to chase a play. Because if you miss something, you miss it. It's okay. There's going to be a million more following right up behind it. Next on up, guys. Lock in profits when you have them. Profits are only good if you lock them in. Saying, hey, I was up $1,000 today. Awesome. And then you follow that with, oh, but I ended up losing $200 on the day. It's like there was no point of even saying that you were up $1,000 today. The only thing that matters is what you finish the day with. The only thing that matters is what you are going to bed with, what is currently in your account. Saying I was up 50 grand on a day and then saying, well, I lost $200 by the end of the day doesn't mean anything. That doesn't make me a good trader if I was up 50 grand on the day and ended up losing it all. It's only good when you lock it in. This goes back to having a cash account. It makes me lock it in. It makes me not overtrade. Once I lock in my profits, I'm in, I'm locked, I'm good. So that's why I love this cash account. And that's why when you lock in your profits, that's how you grow an actual account. People don't want to get or don't want to lock in their accounts or lock in profits. Why? Because they want to see it keep on going. That kind of brings us, to our bottom point real quick, the emotions. Why don't we ever want to lock in our gains when we have them? Because maybe it'll go more. My biggest problem as a trader, as most of our members know, is I leave money on the table. It's the best problem to have as a stock trader. Is if I'm up $1,000, if I'm up $2,000, I lock in my $2,000. And then the stock continues to run, let's say, and I say to myself, I could have made $5,000. I made $2,000 today, but I could have made $5,000 today. But that's a much better problem to have rather than someone saying, oh, I was up $5,000 today, but I lost it all. Locking in money is never a problem. Making money should never be a problem. I am not ever going to play a what if. What if I kept holding? I could always say that, guys. I could say that about everything. What if, I walked out in my dining room and, dinner was made and my whole apartment was clean? That'd be awesome. That'd be great. What if I walked outside and some guy was just sitting out there with a Ferrari and he was just, I don't want this anymore. You want this? Here you go. And yeah, that would be awesome. But you know what? I'm not playing a what if game. I'm playing let's make it happen game. I'm locking in my profits when I have it. You can always think about everything on a negative spectrum. You can always be negative, but why? Be optimistic. Be confident. Be happy with the money you make. You make $2,000, be proud of that. That's the most important thing. Be excited for yourself. Say, yes, I've been working hard. I made that money. Not, I made 2,000, but I could have made, another 3 and turn it into a down thing. I always try to keep myself in check, stay realistic, stay humble about the whole entire thing, because that's how you guys are going to constantly have motivation. Constantly have motivation is when you guys say to yourself, hey, I just locked in $4,000, $5,000 in a day. Sometimes I lock in $1,500, $2,000, but it might not be, a $5,000 day or a $10,000 day. And I say to myself, not a bad day, good day. But and then I kind of have to snap into it. Be like, wait a minute, that's amazing. That's amazing what I'm currently doing right here, making $1,500, $2,000 right here. Because I remember back, in college winter breaks when I worked at a ski resort up on the tubing, standing outside in freezing cold weather, just chucking people down in tubes. And that was my job. Hey, you ready to go? Here you go. Okay, enjoy your vacation. I'll be up here freezing. Getting snow blowers blowing on me, making $8 an hour. $8 an hour, being out there in the cold for 10 hours straight, and after taxes, making about $67 after 10 hours. Making a few $100s to a few $1,000s in the matter of minutes, it does not get any better. And that's why, again, I come every single day so motivated and so passionate and so enthusiastic about what I do, because this does not get any better. Understand market conditions. Key points right here. I have to understand the market conditions that we are currently in, guys. I need to understand the market conditions that we are trading in. I always say the market conditions are like the weather. Some days it's going to be hot outside. You know what I do? I wear a t-shirt, I wear shorts. I can go outside and throw the baseball around. But you know what? Some days it might be blizzarding. And I don't go outside in a t-shirt and shorts. I wear snow pants, snow jacket. I wear a hat. I want to stay warm. So that means some days I may be loading up on 6, 7, 8, 9,000 shares and going big. And some days I'm going to have to go with small trades, 1,000 shares, 2,000 shares. Instead of looking for 50-cent profit or $1 profit, I'm looking for 10 to 15-cent profit. The market changes. And as a successful trader, you need to be willing to adapt to this market. You need to be willing to say to yourself, hey, you know what? This market that we're currently in is very hot. Let's go after and attack it. Or, hey, this market we're currently in, there's a lot of up and down movement, a lot more scalping. Traders are a little hesitant. Be smart. Lock in your profits. Understanding market conditions are so important. Last thing, do not get emotional. Now, these are a lot more kind of like rookie points that I'm going over, but I want to refresh myself, especially going back down to a small account. As I said, I've already grown a small account 2 other times. So doing this, I just like to refresh my memory. I like to say to myself, okay, you're going back to a small account. It's not like trading on a $50,000 account. You have to be very disciplined, very strict. Saying to yourself, every gain adds up. Not, oh, that's only $80. No, that's $80. That's good. It's growing your account. When you have a $1,000 account and you make $100 and you're like, oh, wow, I'm growing my account, or you're saying, oh, that's only $100. No, you are growing your account in a very, good manner right here. Very good manner. So it's all about those little gains, but do not have emotions. When you trade, you need to be a brick wall. When you trade, yes, be confident. Yes, be enthusiastic. Yes, be passionate. But you do not ever be scared. You do not ever say, what is going on? What do I do? Dek, what is going on? Help me. If that is the level that you're at right now, you should not be trading. You have to be, again, watching all our videos in the video library. We don't have a 100-hour video library for nothing. I didn't create that for nothing. I know that information. I want that for you. I want you guys to get in there and study. I want you guys to paper trade. I paper traded for 11 months before going live. And why did I take 11 months? Because I wanted to go 3 months of going green before I went profitable. So, my first month of trading, I wasn't profitable. I stunk. Second month of trading, I wasn't profitable. I stunk. Third month, I wasn't profitable. I wasn't good. Fourth month, hey, I finally have a little green. Fifth month, went back to the red. Sixth month, hey, I finally have a little green. Eighth month, hey, finally getting a little green. And then you'll finally, getting that going. Hey, maybe have one red month. But then, hey, finally green, green, green. Okay, I'm learning. I have some strategies behind me. But as I said, guys, anything you pick up when you first start, you're not going to be amazing at when you first start it, and that's perfectly okay. It's not, hey, I pick up a basketball, I can just go ahead and start dunking on people. Hey, I can't pick up a football, I can't go out into the NFL and all of a sudden just start throwing bombs, to top wide receivers without getting sacked. I'm not going to be good when I first start. So opening up an account without any sort of experience, without any sort of practice, without understanding the emotions that you guys are going to feel, it's not your best idea. And that's the thing that a lot of people don't understand. And I want you guys to have, that knowledge. And I want you guys to have that education that, when you first start trading, it's going to be difficult. And you're going to say, wow, I'm a little lost right now. Wow, I don't really know what's going on. Okay, I don't understand how he's following these plays or finding these plays. I don't understand how he's getting in on these plays so quick. I don't understand how he's getting out of these plays. This stock looks like this stock. Why is that time frame in this time frame? What indicators is he even looking at? There's a lot of confusion at first. So there's no point to be investing real money at the start of it, guys. Make sure you guys are working hard to get to that point where you are no longer confused, where you guys are no longer lost, and you're no longer emotional. Because when you're scared, you're going to lose. When you're getting greedy, you're going to lose. When you're getting over anxious and over trading, you are going to lose. So you have to stick to all these key points right here. Understand each one, not fall under any of them. And you have to say to yourself, okay, I conquered that, check. Conquered, stick to your trading plan. Definitely will. I will not hesitate. Boom. I'm going to cut my losses quickly. I will not chase stocks. I will lock in my profits when I have them. I understand the market conditions, and I will not trade with emotions. All so important and so crucial. Now, let's talk about some of these gains. Let's talk about some of these trades. Let's talk about my months that I had. First month, August 31st through September. All the way to September 30th. I made $1,220. Now, this is not a big month, as you guys can tell. $1,220. So you guys are saying to yourself what? You guys are saying, hey, a $4,000 account, how much am I making right here? Now my account is at a total of $5,220. This is not me turning a $4,000 account to $20,000 within my first day, my first week, my first month. That's not how it works. And on top of that, what do you also see, guys? That's 8 total trades. So we have a total of what? Of about 30 days. And out of all of September, I have 8 total trades. Only 8. That's, me averaging out to what? About 2 trades a week. That means on Monday, I may not be touching anything. I'm studying. I'm getting market conditions down. I'm understanding, okay, maybe let me see what, maybe what big top gainer rips today. Maybe it'll be an easy play for tomorrow. Let me see how Monday reacts. Tuesday, I'll trade. Tuesday, boom, nice little profit right there. But then on Wednesday, what do? Wednesday, my cash has to settle. Okay, if my cash is settling right now, let me research. Okay, let me research. Now Thursday, I got an awesome trade, boom. Now Friday, I'm off, and now I'm all set, ready to go again. And that means, on Monday I can trade. Tuesday I could trade. If I trade on Tuesday again, I got to wait till Thursday. But this is something I want you guys to see. Your first month, $4,000. I made a total of $1,220. It's not anything insane, but it's those constant small gains. As I always say, guys, I like to start every single month. My first trade I like to start with is always on a green note. Why? Because that gets me off the base. I don't want to ever start my first month or start my first trade with the red. I don't want to start with $4,000 and then lose 200. And now it's like, okay, now I'm starting this whole entire challenge with $3,800. That's not why I got into it. So I want to always wait to basically wait for those easy plays. So 80-20, like 90-10 instead. Like make sure, oh wow, this chart pattern is easy. Okay, there's so much momentum on this. I'm going for a quick scalp. Okay, this first couple of weeks right here, I am taking it only the easiest plays possible. I don't care if I lock in $50. I don't care if I lock in $100 right here. I want to make sure it's some of my easiest plays possible. Let's actually take a second right here. Let's go to this E-Trade account, and I just want to look over at my statements real quick, and let's just see, how big my first trade was in September. So I'm going to bring this up for you guys. I'm just going over to E-Trade right now, and I want to see, what was my biggest trade in September? Because September, obviously, is not going to be a giant month by any means. It's only $1,220. But again, from the time of which I kicked this off on August 31st, and then we went to, again, September 30th. And as I said, guys, I have no problems, as always, showing you guys real life statements from eTrade.com. And this is the way, again, a proper mentor should show you. So let's see right here. CBIO made $170. CYCC right here. This is a good trade. Just about $900 right there on CYCC. I have a little loss right here, 170. IDXG, there's a little win of $10. LINU right here, a little win of about $90. RTMB, little loss of $20. SHIP, win of $400. And then we have a decent loss right here of $250. So my biggest loss right here was $250. My biggest win right here is about $900. So you can see my whole entire first month on E-Trade from, again, all of September. I only have what? I only have my biggest win. I don't have a $1,000 day yet. I don't have, any sort of giant plays. I have some trades that are what? $90. I have some losses right here that are $190. I have a win right here, which is only $10. I'm staying small and I'm playing tight. That's the most important thing. I'm playing small and I'm playing tight, and I'm not getting involved with stocks that aren't going to be good for me. But as you guys could see, if I continue on and I carry on right here to, let's say, October, you can see my gains start growing dramatically. Why? Yes, I'm going to have my losses. I lost on APOP right here. APOP, I took a nice little loss. CASI, I start making some nice wins, $1,520. $2,600 right here. ETRM, SRAX. So, you can see my gains climb up dramatically on these plays. And that's why, again, it is just so important and so crucial for you guys to see. So let me actually put this back right here. So my first September right here, 1,220 over on September. Then what happened? Next month, 9 total trades, $6,758, guys. And this is over 9 trades. So I get the ball rolling a little bit. I start feeling a little bit more confident. I'm saying to myself, hey, you know what? I'm starting to get really confident in the plays. The market's conditions are looking good. And now I have 9 total trades. Again, this is not me trading 100 times throughout the whole entire month. This is 9 trades. This is still sticking with 2 to 3 trades a week. November comes around. November right here, 9 total trades. Total of $10,429. And what am I seeing? I'm seeing right here, I have 9 total trades, 2 to 3 total. I'm being confident with my trading. I'm staying smart with my trading. And I'm waiting for those easy setups, 80-20, guys. December comes around, $12,541. December 31st, December 1st, December 31st. There we go. And we have 9 total trades again. This is not, again, a million different trades. This is on a cash account. It keeps me disciplined. Why does it keep me disciplined so much? I trade on Monday. What else am I supposed to do on Tuesday? Tuesday, I'm going to sit around and do nothing? No. Watch the market, study the market, do your research. And on Wednesday, go after it, kill it. Then on Thursday, you don't sit around again. You do your research. Thursday, your funds settle. Then what do? You're all set, ready to rock and roll. And for Friday. January, 12 total trades. I started trading a little bit more. I was feeling a little bit more confident. Now I'm averaging around 3 total trades a week right now. But still, it's not 3 total trades a day. It's 3 total trades a week. Be a stock sniper. I would much rather sit back, wait for that easy shot, rather than just shoot there, shoot there, shoot there, shoot there. Sit back and wait for your play, guys. Wait for that one setup where you say, hey, when I hop in on this, I know I'm going to win. When I hop in on this play, I am going to come out profitable. It's not, hey, let's try this. Okay, that didn't work. Okay, let's try this. Maybe this will work. Okay, let's hop in on this. Please go up. That's not what it's about, guys. It's about waiting for that easy play. I would rather sit back, be a stock sniper, boom. Take that shot, you're good to go. Some people say, oh, Dek, it's another analogy. Be a lion. Be a lion in the Serengeti, prowling. Just waiting for that one easy kill. Oh, it's a beautiful gazelle. I love me some gazelle. Okay, guys? So just wait for that play. You don't just gotta hop out of the hop out of the Serengeti and just run around and all the gazelle are sprinting all over the place. You have no idea what's going on and they all get away. It's like sit back, stalk it, find the play that you want the best. Boom, go after and kill it, guys. You got this. February, back down to 9 total trades. Market conditions are a little different. You know what I'm doing? Staying consistent, staying smart, $10,000, 671. March, 14,541 out of 3 total trades. Now, how can I do this out of 3 total trades? This is from the 1st to the 14th, as you guys can see. How can I do this out of 3 total trades? My account's a lot larger now. This is when I'm buying upwards of what? 6,000, 7,000, 10,000 shares. I buy on a 10,000 share stock and it rips 50 cents. I'm making $5,000. I get $1 rip. I'm making 10 grand. This is what I usually like to trade around. Usually my goal is to make somewhere around over 10,000 bucks a month. That's usually my goal. I usually wake up and say, hey, new month, let's try to get somewhere around 10 grand. That's what I look for. And at the age of 24, making upwards of 120,000 or above 120,000, being my own boss, making my own hours, being able to sit here and be able to trade from wherever I want in the world, if that's in my apartment or if that's somewhere I want to just go, it does not get any better than that. And on top of that, you determine your salary as a trader. You get to pick as a trader, how much do I want to make? You say to yourself, hey, I want to make more. Let me put in more work. Hey, you know what? I want this as a little side hustle. Okay, make it a little side hustle. You're going to get paid like a side hustle. You will get out of it how much you put in on it. And that's not money. I'm talking about actual work, actual studying. You give it your all, you will get a huge return, over 6 figures. You give barely anything and just want to follow random alerts and random plays, you're not really going to be getting too much out of it. So this is how I did it, guys. Again, August 31st, all the way to March 14th, $80,000 by following what? That trading strategy and by following those key points that I was talking about. So my final statistics, my starting account was $4,000. I had a total of 59 trades. My total winning trades was 41. My total losing trades was 18. As you guys can see, that goes out to an average win rate of 69%. Which is basically, I'm going to round that one up to 70%, just to make this example easy. 7 out of 10 trades I went at. 7 out of 10. So as I said, guys, it does not matter if I am, let's say, taking a loss on one trade. What does matter is that I get out of it in a very good time, a fashionably timed trade. I want to get out of it as quickly as possible. Because you know what? If I follow my strategy, I'm going to have a winner next. If I follow my strategy and I win 7 out of 10 plays, and let's say I'm down $100, okay, you know what? This trade isn't working out for me. Let me get out. The next one I get in is going to be a winner. So there's no point to be sitting in on a loser over and over and over again. The time span, again, 6.5 months, going to March 14th, and then count $80,000 or $80,076.84. So I wanted to, again, prove to all traders, basically prove to all different skeptics, and I wanted to prove to myself and everyone who's watching this that you can grow a small account. Most people either think A, you can't grow a small account, B, you can't do it from penny stocks. It's like, this is what I've been doing the last 4 years of my life, and this isn't from luck. This is from following these key points, following these key strategies, going through these again and being able to say to myself, hey, I'm going to stay disciplined. The reason people lose is they don't follow these key points. They just don't. They don't follow a trading plan. They say maybe it'll come back up, maybe it'll come down. Hey, I'll just, we'll see what happens. They hesitate. They don't cut losses quick. They chase plays. They don't lock in their profits ever. If you have a disciplined trader mindset, you will come out successful. If you take in the same mindset that I have right here, and I'm trying to get to you guys, and I want to basically embed this into your brain and say to yourself, you guys can do this. If you guys are saying to yourself, hey, I will follow this criteria, you're going to be set. As long as you guys get this education, the education, again, I provide the education that you guys can get at Dekmar Trades, or the education you guys can get in our 100-hour video library. It's all about what? Just saying, hey, if things aren't going my way, let me get out. You could see the last trade, the last slide right here, my final statistics. I didn't win every single trade. I lost 18 trades. I lost 18 of them. But the main thing about this is what? When we looked at that, I had a $10 loss, $150 loss. When you're making upwards of what, $4,000, $5,000 on a possible trade, and you're cutting your losses when you're down, $200, $300, $400 when you have a bigger account, that's nothing. You'll make that back plus more. But the thing is actually getting out when things aren't going your way and saying to yourself, this isn't my trade. It's time to move on. And if you see a trade rip, it's not, you can't say to yourself, oh, wow, this spiked. I got to hop in now. No, it already spiked. It's not time to hop in. It's time to wait for a better play. And it's to say to yourself, oh, wow, okay, I can't believe I missed this play. I'm going to hop in on this play now. Or good job, I made money on this one. Okay, let me hop in on this one. No, keep your profits when you have them. It's just silly little mistakes on why people aren't successful. That's it. Silly little mistakes on why people aren't successful, why people trade and they don't come out profitable over and over and over again. You guys can do this, and you guys can become profitable, and you guys can be consistent, and you guys will be successful. You guys just have to stick with that discipline. You have to be a disciplined trader and have that disciplined mindset. So thank you guys for joining us. I definitely look forward to working with you all. And again, make sure you guys have that disciplined mindset. Get fired up. Get enthusiastic, because I'm looking forward to seeing you guys bank.